The Fund Managers Association of the Philippines, or FMAP, is an official representative organization of fund management institutions composed of local equity and fixed income fund managers. FMAP's mission is to professionalize fund management in the Philippines via education and training, as well as promoting global best practices and standards. FMAP plays the role of being the voice of the industry and speaks on behalf of its member institutions. It all started in 1997 when a group of 5 equity fund managers would regularly meet for dinner.
We were talking about the market, we were talking about the ideas that we have in helping improve the investment returns of our clients. And we wanted to have our thoughts together in a more organized way, in a more formalized way.
We went through the ups and downs of the markets. We've seen the biggest bulls followed by the biggest bears.
Consistent to its vision of becoming the voice of the fund management industry, FMAP has collaborated with the government and regulators to create policies that would advance the capital market. FMAP has also progressed with its goal of educating the investing public to understand the value of savings and investments.
We also have been going out to talk about investments, educating the public on the need to invest early. To raise the savings ratio of the country, we have to teach it at a very young age. Since 2009, we have funded 13 scholarships from the UP School of Economics. All of them have graduated with honors.
Beyond all these efforts to professionalize the industry and train the next generation of fund managers, FMAP has become an avenue of strong bonds, fruitful friendships, and jovial support.
It was great for a newbie like me who had a very little experience actually running or doing fund management. Just being with the masters, the best of the best fund managers in the board gave me a lot of confidence to understand the business at a quicker pace.
It's a chance to network with different kinds of people in the industry. And the fun part obviously comes from the parties, the conventions, and other events.
With the strong bond among the best in the industry and the goal of professionalizing the practice, the Fund Managers Association is making a mark as a world-class organization.
I really believe that the Philippines has huge potential to become a leading asset management industry in the region, if not the world. And I think with our young, talented population, FMAP can play the role of training and harnessing this talent to produce the best fund managers the country has ever seen.
FMAP will continue to grow in number, pursuing partnerships with ASEAN associations, building alliances, and advancing advocacies, driven by the stronger desire to achieve bigger goals and reach greater aspirations.
My dream for FMAP is to be the voice of the investment industry, not just here, but also around the world.
FMAP is your partner in building wealth,
gaining stronger resonance as the voice of the fund management industry and your partner in building wealth. This is the Fund Managers Association of the Philippines.
Let's build a better world for investing.
Let's lead in improving the quality and standards of the financial profession.
Keep your abreast of financial innovations here and abroad.
Be known for our integrity and professional excellence. Let's always put investors' needs above our own.
Push for financial literacy.
Provide service to the investors through the selection of the best managed funds of the year.
Let's build trust in our industry.
Advocate on behalf of industry issues.
Convince trust and asset management companies to adopt the Asset Managers Code and the Global Investment Performance Standards.
Let's put ethics at the heart of everything we do.
Talk about ethical decision making.
Encourage ethical behavior and be really passionate about it.
Create an environment where investors' interests can grow.
Markets function at their best and economies grow.
For the ultimate benefit of the Philippine society.
I am Chris Arceo.
Mark Yu.
Erwin Ocampo Avante.
Rob Ramos.
Sandra Aurelio Gonzalez.
Mark Ilaw.
Kate Burgos and I am CFA Charter.
We measure up. Join us.
Let's measure up.
CFA Institute is a global association of investment professionals that sets the standard for excellence in the industry. Since its foundation in 1947, CFA Institute has aggregated about 100,000 members and candidates in the fastest growing region, Asia Pacific. In response to extensive demands, CFA Institute has created the Asia Pacific Research Exchange, or ARX, an online research platform focused on investment management. Covering 18 major markets in the region, ARX provides content on over 20 investment subjects, including within the fields of knowledge application, academics, and regulation. Leveraging the extensive membership network and industry resources of CFA Institute, ARX is a sharing platform, feeding its users a great deal of first-hand industry news. ARX is also a learning platform, as a large number of high-quality research papers enable its users to stay abreast of all popular investment topics in the region. Beyond all that, ARX users can hear each other and find industry peers by publishing articles and research reports, making it a highly interactive platform. For more details, please visit www.arx.cfa. ARX is your preferred financial research platform for sharing, learning, and interacting.
Good afternoon, everyone. Welcome to the Case of the Variable Unit Link Insurance Sector webinar. Thank you for being here today. My name is Rochelle Sapang-Manaog, your program host for today's online event. I hope you're all doing well this afternoon. it's going to be information-filled afternoon because we'll be having our guest speaker as well as our panelists for today. Before we start, we'd like to take this opportunity to recognize our annual corporate sponsors, platinum sponsors, COL Philippines Incorporated. Silver sponsors, BDO Capital, Coco Life Asset Management Company, and FTI Consulting Philippines Incorporated. Bronze sponsors, AP Securities Incorporated, DBP Daiwa Capital Markets Philippines Incorporated, and Papa Securities Corporation. All right, so let me share with you a trivia for today. The study of the asset management industry is a very first research study of CFA Society Philippines. And it is actually a first of its kind in the country. So we're very proud to present to you the last phase of the study. This research study was conducted by CFA Society Philippines in partnership with Asian Institute of Management through the Governor Jose B. Fernandez Jr. Center for Sustainable Finance and Fund Managers Association of the Philippines. The study looked into status, issues, and prospects of the three investment vehicles: unit investment trust funds, mutual funds, and variable unit-linked insurance in the Philippines. So today, we're going to present the final analysis of the study focusing on variable unit-linked insurance sector. To formally welcome us all to this momentous event, I would like to call on the Executive Director of AIM, Governor Jose B. Fernandez Jr., Center for Sustainable Finance, Professor Felipe Calderon, CPA, CMA, PhD.
Thank you, Rachel. Good afternoon, everyone, and welcome, and thank you for being with us today. Welcome also to our moderator and members of the panel. Before I introduce our speaker, I would like to express my appreciation for our collaboration for over 2 years with CFA Society Philippines, led by its president, Dr. Rob Ramos, and also the Fund Managers Association of the Philippines, represented by Executive Director Mary Lou Alcoseba. On that note, please allow me to introduce our speaker. Arlene Gutierrez is an assistant professor at the Department of Agribusiness Management and Entrepreneurship, College of Economics and Management at the University of the Philippines at Los Baños. Throughout the course of her teaching career, she has handled courses on foundations of management, agribusiness research and methodologies, entrepreneurship, strategic management, quantitative business analysis, financial management, and investment management. She has also published journal articles on topics related to agribusiness and investments. She finished her degree on a bachelor's degree in agribusiness management from UPLB in 2021, and her degree on a master in business administration, MBA, from the Asian Institute of Management in 2015 under the ADB Japan Scholarship Program. She graduated in her MBA with distinction and was awarded the Student Leadership Award. Arlene is currently serving as the Associate Dean of the College of Economics and Management at the University of the Philippines at Los Baños and has been awarded the 2020 UPLB Outstanding Teacher Award in the junior category. Without further ado, ladies and gentlemen, please welcome Arlene Gutierrez. Thank you.
Thank you very much, Professor Calderon, for your introduction. Good afternoon, everyone. So I'm here to present the result of our study on the assessment of the asset management industry in the Philippines, the case of the variable unit-linked insurance sector. As Ms. Rochelle mentioned, this is the last phase, the third phase of this three-part study. So let me just share my PowerPoint presentation. Okay. So again, this is the case of the variable unit-linked insurance sector, the third of the three-part study on the assessment of the asset management industry in the Philippines, following the cases of the unit investment trust fund and the mutual fund sector. As a background of this study, The insurance sector plays a key role in the socio-economic development of a country, providing financial security to the people as well as contributing to the government in terms of taxes. The sector includes life and non-life insurance, as well as pre-need insurers, mutual benefit associations, health maintenance organizations, and micro and macro insurers. Life insurance continued to dominate the sector with 39% total share of the market as of 2019. A VUL, or a variable unit linked insurance, is defined as a life insurance policy with an investment component. VUL insurance includes investment sub-accounts, which function similar to a mutual fund that allow for the investment of the cash value. Despite the developments in the industry, the VUL insurance sector still lags behind in terms of the percentage of Filipino adults who own a life insurance. According to the latest financial inclusion survey of the Bangko Sentral ng Pilipinas, the percentage of Filipino adults who own a life insurance in 2019 stands at 23%, or equivalent to 16.6 million Filipinos aged 15 years old and above. With this, the CFA Society Philippines, in partnership with the Asian Institute of Management, Governor Jose B. Fernandez Jr. Center for Sustainable Finance, proposed to conduct an in-depth study on the Philippine asset management industry, primarily focusing on the VUL insurance sector. This is the third phase of a series of studies to assess the Philippine asset management industry following the assessment of the unit investment trust fund and mutual fund sectors in the Philippines. These are our objectives. So the general objective of our research is to assess the status, problems, and prospects of the VUL insurance sector in the Philippines. Specifically, the study aimed to, number one, evaluate the market landscape and key characteristics of the VUL insurance sector in the Philippines. Second, determine the current problems faced by the key players of the VUL insurance sector in the Philippines. Number three, assess the profile of the VUL insurance retail investors. Number four, evaluate the level of understanding among Filipino retail investors about VUL insurance. Number five, assess the perception among investors and non-investors towards VUL insurance. Number six, determine the level of awareness of investors towards socially responsible VUL insurance. And last but not the least, recommend strategies to address the challenges and weaknesses of the VUL insurance sector in the Philippines. We use the same research framework as we did with the UITF and mutual fund sector. We looked into the VUL insurance sector in the Philippines from both the supply side and the demand side. From the supply side, we assess the current performance, strategies, clients, and problems encountered of the key players of the sector. Whereas in the demand side, we looked into the level of awareness, perception, and attitude of the retail investors of the VUL insurance sector. We also looked into the regulations governing the sector as well as other macroeconomic factors. So for the results, I'll focus first on the VUL insurance industry, and then later on, we will discuss the demand side, which is on the retail investor side. And then this is in comparison with the first two studies. And then I will end my presentation with the summary of insights that we gained from the three phases that we did for this particular research study. With regards to the VUL insurance industry in the Philippines, there are 133 insurance providers as of September 2021. So this is from the Insurance Commission data as of 2022. The total assets of the insurance sector amounts to 2.01 trillion pesos, and the total premiums of the insurance sector amounts to 278.7 billion pesos. Whereas the total net income of the insurance sector amounts to 37.5 billion pesos. There are 31 life insurance providers in the Philippines, and it dominates the sector with 79.3% total share. In terms of the breakdown of insurance total assets according to insurance providers, The top three that dominates the sector include the Sun Life of Canada Philippines Incorporated with 274.3 billion peso total asset, followed by Philippine AXA Life Insurance Corporation with 141.6 billion pesos in total assets, and the third with an 11.5 share or 140.8 billion pesos in total asset is Insular Life Assurance Company Limited. In terms of the breakdown of insurance total premiums, according to insurance providers, we have the same top key players, which include Sun Life of Canada Philippines as the top one with 39.2 billion pesos and 17.2% share. Second is Philippine AXA Life Insurance Corporation with 31.2 billion pesos or 13.7% share. And the third is Insular Life Assurance Company Limited with 31 billion pesos total premiums or 13.6% share. In terms of the invested assets in VUL, the total invested asset as of 2020 amounts to around 753 billion pesos. This is also equivalent to 59.5% of the total invested assets in the insurance sector. And throughout 2016 to 2020, the total invested assets in VUL realized a 13.1% year-on-year growth. We also conducted a survey among the VUL insurance providers in order to look into their specific performance, key problems, and prospects of these players. However, we receive a relatively lower response rate as compared to the other two studies that we did. So out of the 31 VUL insurance providers in the country as of 2021, we only received responses from 8 key players. So these respondents were mostly head of investments or the chief investment officers of their respective financial institutions. In terms of the types of VUL insurance fund types offered by our key players, all of the 8 respondents are providing equity fund. 87.5% of them provides bond fund, 87.5% provides balance fund, and 62.5% provides money market fund. In terms of the profile of the retail investors as perceived by the VUL insurance providers, so this is the summary of their profile. When asked how much or what is the percentage of the retail investors in terms of their total client share, so most of our respondents mentioned that retail investors comprise around 90% of their client population. So in terms of age, majority of the retail investors are between 35 to 50 years old. So 25% of our respondents mentioned that. In terms of profession, so they are mostly full-time employees or entrepreneurs. In terms of risk appetite, so the characteristics of the majority of the retail investors are moderate. In terms of the preferred investment horizon, majority of the retail investors mentioned that they prefer medium term. And in terms of investing experience, 37.5% of the respondents mentioned that majority of their retail investors are not very familiar with investments. And in terms of the primary reason for investing, 50% of the respondents mentioned that majority of the retail investors cited protection or insurance as their primary reason for investing in VUL. In terms of the main distribution strategy of the VUL insurance providers, it is still dominated by the use of insurance agents, with 100% of our respondents citing this specific strategy, followed by digital or mobile, with 50% of our respondents mentioning this, and then one-on-one referrals with 37.5%, private networks 12.5%, and others 12.5%. The VUL insurance providers are also asked on the most important skills needed by VUL insurance teams to succeed in the sector as rated by our VUL key players. Among the specific skills, they cited financial analysis as very important for our research team, knowledge of financial instruments for the investment team, portfolio management, of course, for the portfolio management team, and for the sales team, it's presentation skills. We are also, the VUL insurance providers were also asked to rate the trends or issues in the VUL insurance sector on a rating scale between 1 to 5, with 5 being the highest or 5 being the most important trend or issue in the sector. So these are the results. So for the changing demographics of Filipino investors, the average rating is 4.1. Outdated legislation is 4.0. Competition with local VUL companies with a rating of 4. Digitization in the financial services sector with a rating of 3.9. Competition with UITF, 3.5. Competition with foreign VUL companies, 3.3. And competition with mutual funds, 3.3. So this particular result is consistent across the other two pooled investment funds. So with changing demographics of Filipino investors as cited as one of the most important trends or issues in that particular sector. So these are the key findings from the supply side. So the VUL insurance sector led the pooled investment funds in terms of invested assets. As of 2019, which is the same data across our pooled investment funds. So UITF has around 657.6 billion in asset under management. Mutual fund sector recorded an AUM of 284 billion, while invested assets in VUL insurance amounted to 726 billion in 2019 and increased to 753 billion in 2020. So the major driver of the lead of the VUL insurance in terms of the asset under management or the invested asset is the fact that since VUL is a component of the insurance, so there is a habitual investment among the retail investors. So there is like a commitment for them to regularly invest in on these kinds of instruments. So whereas for UITF and mutual fund, that is the missing piece. In terms of the client profile, majority of the investors of VUL, VUL belong to the retail investor segment. Okay, so same also with UITFs and mutual funds. And the main distribution strategy is through the insurance agents. In terms of skill gaps and problems associated with VUL insurance teams, respondents mentioned the following. Number 1, training the sales teams to educate clients regarding investments and financial literacy, high turnover ratio in their VUL teams, unable to properly explain the VUL insurance products, and lack of marketing materials for nationwide awareness. If we're going to compare the skill gaps and problems that the other two pooled investment fund sector experience, we can observe that these are the same problems. So specifically the lack of skills in terms of the lack of skills and knowledge in terms of the specific products that they're offering, which results with the lack of understanding and awareness as well of the retail investors on these financial instruments. Okay, so in terms of the demand side, so we conducted a survey among 194 Filipino individuals to assess their awareness and perception towards VUL insurance. So we were able to gather 194 responses, and the breakdown of which is as follows. So 28% of this are working professionals, 60.8% are students, so either college students or graduate students, 7.2% are entrepreneur, 1% are retirees, and 2.6% are unemployed individuals. So though we have a different set of respondents across the three different phases of the study, we can notice or we can observe that the profile of these retail investors are comparable in terms of their specific characteristics that we will see later on. So in terms of sex, majority is dominated by female, 59.3%. Annual income is less than 100,000. So 63.3% of our respondent cite this. Age is 23 years old and younger. 61.3% of our respondent. In terms of investing experience, they are not very familiar. So they have a savings account, so in the bank, so majority of them. In terms of the main purpose of investment, 45.4% of the respondents mentioned that they are after additional source of income. And in terms of return and risk expectations, moderate return and risk. So this is what I'm talking about in terms of the profile. So if we're going to look back at the other studies that we conducted, more or less, these are the same. In terms of the breakdown of financial asset investment among the respondents, so 30%, on the average, 30% is comprised of cash and cash equivalents. 15.59% of their total portfolio are equities. 11.47% are insurance products. 11.25% are other funds. 8.13% commodities. 6.39% bonds. 5.46% are alternative investments, and 2.75% derivatives and structured products. So basically, it's still dominated by savings, which are cash and cash equivalents. Where the respondents are asked on their level of understanding towards VUL insurance. They are asked to rate their level of understanding from 1 to 5, 5 being the highest. We also compare it with their rating in terms of mutual funds, though these are two different groups of respondents. So we relatively see similarities in terms of the ratings across the different respondent group. Consistently, the students are the ones with the lowest ratings in terms of their level of understanding, with 2.7% in mutual funds and 1.9% in VUL insurance. And then the full-time entrepreneurs and then part-time employees and retirees are the ones who are rated a high level of understanding for VUL insurance. And for mutual funds, the highest are from the unemployed and full-time entrepreneurs. The average rating for the level of understanding is 3.1 for mutual funds and 2.3 for VUL insurance. So relatively lower in terms of the VUL insurance. In terms of investment experience, or when asked if they have VUL insurance, 72% mentioned that they do not have currently VUL insurance, while 28% has VUL insurance. If we're going to look at across the different respondent groups, okay, so a big chunk of our students do not have VUL insurance, and also the unemployed. Whereas for the working professional or employees, so they have VUL insurance, as well as for retirees and for the full-time entrepreneur and part-time employees. So the number of years investing in VUL insurance, basically majority of our respondents, 56.6%, mentioned that they are investing in VUL insurance for more than 3 years. And the types of funds they are currently invested in, majority are saying that they are invested in equity fund with 61.5%. This is actually very consistent with the other types of studies that we conducted, though majority of our respondents mentioned that they are really moderate risk takers, but a bulk of them are invested in equity funds. In terms of the number of VUL insurance policies held by the respondents, 50.9% mentioned that they own one VUL insurance policy. Okay, so in terms of the VUL insurance features that retail investors deem to be important, so again, they were tasked to rate the features from a rating of 1 to 5, with 5 being the highest. The highest rating belongs to accessibility, so they deem it as one of the most important feature of VUL insurance, followed by affordability, Next is better earnings potential. The next is transparency. Next to accessibility, then followed by affordability, better earnings potential, liquidity, and also second is professional fund management. Okay, so we also ask them what are the factors that motivate them to invest in VUL insurance. And then we receive varying responses from our respondents, but some of the most commonly cited reasons or factors are professional advice, protection, insurance, family, social media, or the internet, and their working environment or their specific jobs. In terms of the problems that the respondents encounter with their VUL insurance, so these are the factors mentioned or the problems mentioned by our respondents. So specifically high fees and low return. We also ask our respondents, okay, so on their level of familiarity on socially responsible VUL insurance, again from a rating of 1 to 5, with 5 being the highest level of familiarity. The average rating is 2, which actually comprise to a low level of familiarity with socially responsible VUL insurance. And if asked if they are willing to invest in socially responsible VUL insurance, majority of the respondents, 52%, mentioned that they are unsure. This is driven by their low level of familiarity towards the socially responsible VUL insurance. So these are the key findings from the demand side. Number 1, majority of the respondents have no investment in VUL insurance funds. So students are perceived to have the lowest level of understanding of VUL insurance. Major problems include the limited knowledge and understanding of the financial instruments among the current retail investors, which further results in a low level of satisfaction with the performance of their investment. So this is actually very similar with the problems that the UITF and the mutual fund sector encounter with regards to their retail investors. So the lack of understanding towards the financial instruments, which result in a low level of satisfaction with the performance of their investment. It is also evident that most of those who are not invested in VUL insurance belong to the young group of the population, which is also consistent with the previous studies conducted in mutual funds and the UITF. So for the conclusion and recommendations, these findings were consistent with the previous studies conducted on the awareness and perception of retail investors towards UITF and mutual fund, as well as the critical success factors that drive industry performance. To strengthen the presence of VUL insurance in the minds of investors and increase the investment rate of VUL insurance, especially within the younger segment of the market, several strategies must be put into place. These strategies include, number 1, make VUL insurance more accessible by utilizing digital platforms and financial technology. Second, improve the low level of awareness among the retail investors, which is driven by the lack of knowledge among the VUL insurance sales team. Third, customized insurance products are the future for the industry. Number 4, integrate VUL insurance in an employee guaranteed investment plan. This is the summary of our study on the assessment of the asset management industry in the Philippines. So we were just going to cite some insights that we gained from the study across the three phases, which ran from 2019 to 2020, the end of 2021. Despite massive developments in the Philippines financial market landscape, the pooled investment fund segment still has a long way to go to catch up with its counterparts, especially in the Southeast Asian market. The problems are consistent across the 3 types of pooled investment funds, as we have observed from UITF mutual fund and the VUL insurance. It highlights the lack of awareness and understanding of retail investors towards these instruments, specifically the younger segment of the population. So given that majority of the client pool of these pooled investment funds belong to the retail investors. Financial inclusion and financial awareness have been the long-standing factors that challenge the demand for pooled investment funds. The UITF and mutual fund sectors suffer from lack of financial awareness, while the VUL sectors suffer from the lack of insurance consciousness. So as a matter of fact, based on the BSP Financial Inclusion Survey, as of the latest one in 2021, so 2 out of 10 adults, Filipino adults, keep their savings in the bank. So this is from the basis of around 53% or 5 out of 10 Filipino adults who have savings. And then 23% or 2 out of 10 Filipino adults have insurance, which is actually a very low insurance penetration rate as compared to our Southeast Asian counterparts. And in terms of investment rate, 25% or 2 out of 10 Filipino adults are investing in financial assets. So this is actually very low and driven by lack of financial awareness and lack of insurance consciousness. So efforts that will promote financial inclusion, digitalization, improved accessibility, and education drives will improve the demand and sustain investment confidence among the retail investors. To do this, we have to resolve issues concerning the regulatory frameworks which are actually existing and drives the different, basically there are issues concerning the regulatory frameworks driven by different regulating authorities imposing different governing laws to the pooled investment funds. Reforms must be implemented to harmonize and synergize the pooled investment funds in the Philippines. For example, the CIS law, once passed and approved, will create an even playing field in the industry and will create a more competitive environment among the pooled investment funds. So as of 2021, the law has not been passed. Okay, so thank you very much for your attention. So that is it for our presentation on the assessment of the asset management industry in the Philippines, the case of the variable unit-linked insurance sector.
Thank you, Arlene, for presenting the final analysis of the research study, specifically on variable unit-linked insurance sector. We will now go to the discussion part of the program. I'll be calling our distinguished panelists. One of our panelists for today is Manulife Philippines Chief Actuary. In this role, he oversees the valuation and reporting functions, including regulatory and management reporting, business planning, capital and participating dividend management, assumption setting, and IFRS 17 transition. Prior to this role, he was the company's pricing actuary, leading the development of innovative insurance products such as unit-linked and critical illness plans. He was seconded for 5 years in Manulife Cambodia and was part of the team that launched the country's first life insurance products. He is a qualified actuary, a graduate of UP Diliman's BS Mathematics program. He is a fellow of the Actuarial Society of the Philippines, fellow of the Society of Actuaries, and fellow of the Conference of Consulting Actuaries. Let us welcome our first panelist, Mr. Joseph Daryl Abisamis. Our next panelist graduated in University of Santo Tomas with a degree on Bachelor of Science in Economics. She's been working with the Insurance Commission's Investment Services Division for more than 7 years, in charge of investment approval of insurance, pre-need and health maintenance organization companies. Currently, she is a supervising insurance specialist position in the Insurance Commission. May we call on Ms. Angeli Ronica Buenviaje. Next up, our panelist graduated in Ateneo de Manila University with a BS Mathematics degree. He is an associate member of Actuarial Society of the Philippines and been working with the Insurance Commission's Actuarial Division for more than 8 years. The actuarial division is in charge of approval of life insurance, pre-need and health maintenance organization products. He currently holds the position of supervising insurance specialist in the Insurance Commission. Let us all welcome Mr. Rafael Luigi Dato. Last but not the least, joining us today is the head of Asset and Liability Management of Sun Life, where he oversees asset and liability management duties of Sun Life. In his previous role as Investment Portfolio Analytics Manager, he looked at the performance of all the VUL mandates of Sun Life using analytics to generate insights that help improve the overall investment strategy of the team. He joined the investments team in 2015 as an investment specialist to assist in the product and fund development mandates of Sun Life. Prior to joining the team, he worked as an actuarial specialist for both Pru Life UK and Sun Life. He holds a bachelor's degree in mathematics and a master's degree in development economics from the University of the Philippines. May you please have Mr. Marlo de Guzman. And our moderator for today's panel discussion graduated with a bachelor's and master's in applied mathematics, major in mathematical finance from the Ateneo de Manila University. He holds 3 designations: Chartered Financial Analyst, Chartered Market Technician, and Financial Risk Manager. He has been in the asset management industry for the past 10 years, managing equity investments. He is currently the equities trader of Sun Life Philippines. May you please have our moderator, Mr. Rod Barrett, CFA.
Good afternoon, everyone. Thank you for having me here. I will be your moderator for this afternoon. And we have a lot of questions slated for our panelists for today. But for our audience, please feel free to put your questions in the Q&A box. We will ask them also to our panelists later. So to kick things off, I want to start with Jody. Jody, how are you?
Hello.
And for our fellow panelists, please feel free to put your questions or your answers also to the questions, even if you are not the one being asked. So let's make this interactive and engaging for everyone. So my first question, Judy, revolves around the latest financial inclusion survey. So we only have parang a very low insurance penetration, so 23%. So my question is, given that one of the recommendations of the study is to make VUL products more accessible to more people, and if you look at the global insurance outlook, parang digitization seems to be a trend nowadays. So for you, what do you think are the challenges in the current distribution model? So I know we rely much on agents, and how can we reach and serve more Filipino people?
Yes. So this is a layered question. Also, to answer this, I guess we have to remind ourselves first that VUL is not just an investment product. It is also it's also an insurance product. In fact, it's primarily an insurance product with an investment component. So that means if we think UITFs and mutual funds are already complex for the average Filipino, add to that the insurance layer of VUL. So you'll be starting to ask yourself questions like, how much insurance do you need versus your lifestyle, the size of your family, how much you're making, are you overinsured? There's just lots of complexity when it comes to insurance. So in Manulife, we also did a research on this in terms of the direction of how to go forward with VULs. And when it comes to insurance, based on our study, consumers actually prefer having someone to talk to because of the complexity, so that they get a better understanding of all the details. So there is currently a heavy reliance of agents, and yes, that is true. And they will continue to be necessary in protecting Filipinos. This will change over time, though. As you said, digitization, which was fast-tracked by COVID-19, continues to grow, and mutual funds and UITFs have, they were successful already in that field. So if we want a VUL to reach more Filipinos, as with other traditional insurance, we have to make the product simpler to the extent maybe that there is no need to talk to an agent, but there's less need. And then you have to make it available for direct purchase. And then at the end of the day, we also have just to give the option to the customer to speak to someone when they feel it's necessary to do so. So it doesn't have to be an agent, actually. Maybe the insurance company would just have a hotline, just because it's just the nature of the product. It's really complex. Like meron nga, di ba, we have a saying that insurance is bought. It's not bought, it's sold. Parang you need an agent to sell it. You don't have people, going around looking for insurance. So we just have to make it more simpler in order to reach the average Filipino.
Okay, thank you very much, Judy. If the others have something to add, please feel free to do so. Regarding the education, let's go to Luigi from the Insurance Commission. This is also, I'm not sure if he's here. Is he here? Si Luigi. But maybe this is also for Miss Nika. So how do we address the finding of the study regarding sales agents having difficulty explaining the features of the products and lack of after-sales services? And how did the regulations change throughout the years? Maybe certification, exams, and as mentioned a while ago by Jody, it's very important to educate the clients. So, here's Luigi.
Hello, good afternoon. Can you hear me?
Yes, we can hear you.
Yes. I think I'll answer the second question first. Regarding how the regulations change throughout the years. So, currently all persons are required to obtain a license from the IC before it can act as an agent. So to do that, you must satisfy several requirements. So among which are the training in VUL, and the passing of the exam conducted by the IC. Now, these requirements have not changed much since VUL started in the early 2000s. And in my personal opinion, I don't think changing these requirements, imposing additional certifications and qualifications on agents will address the issue of that, just as you mentioned. Because as you know, the services provided by the agents extend beyond their qualifications at the time that they applied for a license. It should be a continuous learning experience for the agent. So what I think we can do first is to put in place enabling policies that will promote quality service by agents. So an example of that such policy is the one that the IC issued in 2019, circular letter number 2019-71. So the circular basically institutionalizes the requirements on oversight and governance of life insurance products. Among the requirements of the circular is that life insurers should select agents that have the necessary knowledge, expertise, and competence to understand the features of the product and the identified target market. Aside from that, it also requires life insurers to disclose timely and adequate information to agents so that they will be able to understand the products and carry out the appropriate distribution activities in accordance with the best interest of the customers. And another example of that enabling policies is the one that we are currently working on, the enhancement of the guidelines on VUL. Some of the areas of regulation that we enhanced are the disclosure requirements and the selling procedures. So the enhancements should not only be able to provide additional layers of protection for the consumers, but it should also educate the agents. So in essence, through the enhancement, the IC is trying to say that agents, you should focus on these aspects of the VUL product and that they should study. Secondly, there should be stricter monitoring and regulation of the market conduct of agents. So it is very timely that the Financial Consumer Protection Act was passed this year. The law basically strengthens the power of the IC to examine the manner by which the agents are selling the products, as well as in managing their relationships with their clients. So the IC is part of the working group in charge of the crafting the IRR for this law, and the market conduct examination is one of the main areas that we are focusing on. That's it.
Ayun, thank you very much, Luigi. So, we welcome those changes, especially on the VUL guidelines. Now shifting to the pandemic. So you mentioned a lot of guidelines a while ago. And we also saw a decline in the business during the COVID-19. And I think this is for Ms. Nika. So given the changes we saw during this pandemic, how did IC adapt to the pandemic in terms of maybe client documentation and other regulations? And what are the changes in VL guidelines introduced to address these problems?
Yes, good afternoon. Can you hear me?
Yes, yes,
Yes.
Nika.
For starters, the Insurance Commission quickly formulated and implemented regulatory policies through the issuance of various circular letters to ease the impact of COVID-19 pandemic to the insuring public and its stakeholders. So the Commission shifted to online submissions of official correspondences and requests for approval of insurance products and investments. So in terms of client documentation and forms, which we have mentioned, I think this is relative to the VUL products, that we are discussing right now. So the IEC did not implement changes in that aspect, but rather the focus of IEC was more on making insurance products accessible and the transactions convenient to the policyholders and prospective insurance clients. So if I may know, there is a particular circular which the IC issued. This is regarding the remote selling initiatives of insurance companies. IC recognizes the significant benefits derived through the use of ICT by way of teleconferencing, video calls, and such. So these makes it more convenient for the agents to reach their clients and potential insurance clients and expand their reach, cost-efficient sales, and also increase their productivity in terms of their targets in their own respective companies. So with regard to the query on the changes in the VUL guidelines, for the information of everyone, and also as mentioned by Luigi a while ago, the IC already started a review of the VUL guidelines prior to the pandemic. So this aims to address the gaps in existing regulations which became more prominent during the pandemic and to update the guidelines in tune with the current investment environment, enhancing disclosures as mentioned before, and selling procedures among others. So a technical working group was also created for this purpose. Currently, we are already in the final stages of review and consultation with the concerned stakeholders as regards to the revision of the VUL guidelines. That's all.
Thank you, Ms. Nika. Looking forward to that one. And
hopefully.
yes, so
matapos na.
it's a good thing we also have people from the industry here. So one of my colleagues is Marlo. So Marlo, since IC is already here, what new regulations should be introduced to improve the success on VUL? So because Ms. Arlene a while ago mentioned, I think we have the biggest assets in terms of the 3 CIS. So what do you think are new regulations that we can improve on for this?
Yeah, thank you, Rod, for that question. It's very timely given the changes that's happening not only in the insurance industry, but the whole world because of the pandemic, after the pandemic and also the inflation. So I think Ms. Angeli has already provided a lot in terms of what's happening in terms of the insurance industry. But in my take, so for VUL products, unlike traditional insurance, which is the alternative, give the clients the option to choose their own return outcome, the investment outcome via their choice of funds. So basically, this choice of funds is directly proportional to how positive the client experience will be. And these funds need the proper regulations in terms of which instruments or investment assets they can access. So I think you're following where I'm heading here, right? So the Insurance Commission has actually definitely made strides in terms of expanding the investment universe available to fund managers and also to policyholders in order to drive those better returns. So basically, I will sum up it into 3 points. So number one, the current push towards this expansion in terms of investment horizon and types of instruments that the insurance companies can use to meet the expectations of policyholders is very positive from an insurance company's perspective, as it allows us to actually basically expand the investment horizon of our clients. But future regulations with this expanded investment universe, future regulations should also focus towards streamlining the review process of these securities. No, so in the investment markets, most opportunities are actually fleeting. So one trend may change. One trend may be in right now, which may change in a few months' time, no? And we may have missed it because of maybe some bottlenecks in terms of review. And I think personally, that's where I think we have to focus as well moving forward, not only expanding our horizon, but actually being able to grab opportunities in the market. And lastly, for insurers, this time around, there is a need for balance. Right? As we expand the investment horizons of our clients, there should be more guidelines in place in terms of assessing the level of risk that the insurance company is exposed to, is particularly on the VUL segment, because we are actually exposing the clients directly to these types of risks. So overall, our objective is really very simple. It's really just to deliver the best outcomes for our policyholders. And regulation should focus on expanding the capability of insurers to provide those positive outcomes without actually compromising the current status quo. And that positive outcome will actually help in terms of being able to provide a more stable ground for the success of the VUL products. So that's it. Thank you.
Thank you very much, Marlo. Now I'll pick a question from one of our questions in the Q&A box. So this is Miss Arlene. So Miss Arlene, why were students now are used as respondents knowing that their investment capability will be low?
Thank you, Sir Rod, and thank you to our participant who asked the question. Actually, comparing the three phases of this asset management study that we conducted, we really find it difficult to gather respondents specifically for our retail investors. But comparing the profiles of our respondents from the first and the second, so this is still dominated by the younger ones, though medyo mas malaki lang po in terms of the percentage for this particular study. So it kind of validated the results from the first and the second. So regardless of that, we look into the specific segments naman of the population or the respondent group. So despite the bigger percentage belonging to the younger segment.
Okay, thank you very much, Miss Arlene. So we have another question here. So I think this is for everyone. There's a forum in Reddit despising VUL due to financial advisors not explaining completely and informing their clients about the VUL. So I think this is also related to the client education. This product is prioritized mostly because it has the biggest commission. This forum despises it so much that they keep on saying that we don't need insurance if we don't have dependents. What is your take on these issues? So feel free, everyone. So I don't know who wants to answer that question. Yes, Jody?
Okay, sige. Actually, I'm aware of this forum in Reddit, and I visit it often also. So there's two parts to the question. It's first whether it's about selling the VUL, and the second part is on the whether you need insurance if you have dependents. So in the first part, I think companies must do their part also in training their agents, so that their role is really to do financial planning. So financial planners, you help customers determine your need, whether or not it's a product that has the highest commission or the one that the company is pushing because they have good margins. At the same time, we must also remember VUL is a product that tries to be one solution for both insurance and investment. So if you're a power user or if you're really an investor who is looking for returns, then if you have access to pure traditional insurance and you have access to like stocks, yung mismo, those types of investments that is not trying to be a one-size-fits-all solution, then you can find better returns. We just have to remember that VUL is designed to be something that can address both at the same time to make it simpler for customers. And then on the latter part of the question, where insurance is not needed if you don't have dependents, this is where the insurance advisor actually will come in. simply put, yes, you won't need insurance if you don't have dependents, but that assumes that you don't have loans, you don't have payables. So insurance is also not limited to life insurance. So most life insurance companies here, they also have health and hospitalization, which you will need regardless of having dependents or not. So it will be difficult to generalize. And this is where it comes in, where I said earlier that insurance is very complex.
Yes, thank you very much, Rudy. I agree with that. No, so even if you don't have a dependent, I think one of the best products that I got is the ano yun, yung condition, critical illness. So even if you don't have one, so you are still exposed to that kind of risk. Marlo is raising his hand. Yes, Marlo.
Yeah, I think we need to dissect the question a bit further, right? So it's really not an attack on VUL per se, but the way it is distributed to the clients, right? So unfortunately, there really are bad eggs. In any market, in any industry, there are bad eggs whose sole purpose is actually just trying to get a piece of the pie in terms of commission, etc. But I think we have to rethink how we view our advisors. So remember, our advisors or agents, as they called it, is really their purpose is to connect very unconnected markets. Like, so we've established earlier on that the number of uninsured in the country is very, very high, and really advisors really need to play a big part in terms of connecting the insurance companies, the providers of the products, and the clients. And as Jody has mentioned, the product is very complex, and advisors really provide that bridge into helping the uninsured, those who are underinsured, get the best type of products that will suit their needs specifically. So overall, VUL is not really the issue here. It's really the distribution. And we have, as Jody has also mentioned, we have the moral responsibility to ensure that our advisors are well equipped into explaining the product features to the clients, and to make them understand if it really suits their needs overall. Right? Thanks.
Thank you very much, Marlo. Okay, let's ask the last question in the Q&A box. With the current returns we are getting from the plethora of VUL funds, most of the projections made years ago for premium holiday options presented are below projections. This has compelled some clients who were led to believe that premiums would stop already. Is the IC also studying the viability of VUL as a limited pay whole life plan? I think this is for the IC.
Yes. Good afternoon. So I guess that's one of the drawbacks of the VUL, the design of the VUL. It's highly dependent on the performance of the market. So that's why in the product disclosures, in the sales illustrations, the insurance commission requires the insurance companies to disclose that the returns are not guaranteed, and that premiums may have to be paid in case of underperformance of the fund. But we noticed that in the sales illustrations currently being required by the IC, we did notice that the projected return rates, investment return rates, are quite high, and may not no longer it's no longer that relevant, especially today that we have, as mentioned by the inquirer, that the returns are very low now. So in the revised VUL guidelines, we're actually proposing there to include to revise the investment projection rate. So we are proposing to include a 0% investment return, so that the client will be the client will be knowledgeable about what the values of this policy will be in case that there are no improvements in the fund. So that's one of the things that we're currently doing in IC.
Thank you very much, Luigi. So now let me go back to my questions. First, I read in the study about the regulatory sandbox framework for insurance technology innovation. So it's the circular letter number 2020-73. Since we have IC people here, Miss Nika, can you elaborate and talk more about this circular letter 2020-73?
Yes. Yes. The this particular circular talks about the insurtech primarily innovation. So basically it allows small scale and live testing of technological innovations by way of this may be products, services, business models, and other delivery mechanisms under limited and time bound supervision. So this covers IC-regulated entities who may collaborate with other entities who may be licensed or not by the IC. However, for those who are not licensed by the IC, meaning they are not our regulated entities, they will still have to apply to the IC for to give their proposals to the IC. And also, it will be screened by the division who's handling this particular sandbox framework. So to continue, no, this particular sandbox approval for a particular applicant will only be running for 1 year. So if, for example, hindi matapos within that given 1 year, they can apply for another a maximum of I think 6 months, no. But that is subject to the approval of IC. Moreover, the circular enumerates application screening parameters and reportorial requirements. I think you have to submit a monthly report, progress report of I think monthly to the IC, but this is being handled by a different division. So I'm just explaining it in a simple, the simplest I can. And but should you or the body be interested to know more about the sandbox framework, maybe in your future sessions, we can also give an opportunity for that particular division, our regulation enforcement and prosecution division, to explain further the details of this particular circular.
Okay, thank you, Miss Nika. Like, do we have applicants already in that particular framework or not yet?
Well, based on the data given to us by the REP division, no, they already received a handful of applications, but to date, I think they were only able to approve one, but I cannot give the
The
particular
name.
details as to
Okay,
the
okay.
application.
Okay, okay. I'm asking
So
this
there.
question because for us na incumbents, so we have legacy businesses kasi. So I also want to ask, maybe this is for Luigi naman, what are the steps that IC is taking to promote fintech aside from the the sandbox, especially insurtech in the Philippines? Are we allowing or making it easy for pure digital firms like digital banks with legacy businesses to set up shop here in the Philippines? The main difference for a pure digital, maybe insurtech, is I think the speed, maybe because if you're a pure digital player, then you don't have any legacy businesses to attend to or to take about. So maybe Luigi, do you have data on that one?
Hello, good afternoon. I think the insurtech question was already answered by Nika. So I'll just answer the second question regarding the digital player. So I believe they will undergo the same process as any other insurer in terms of obtaining a license to sell in the country. I believe we already have one purely digital insurer in the country, that's in life. In terms of the products that they will offer, the applicable rules will depend on their business strategy. No? So if the insurer plans to sell products online, we have existing rules on electronic commerce of insurance products. So we will apply that guideline to them. But if their strategy is not covered by any regulation, then they may apply under the regulatory sandbox, which was discussed earlier by Nika. So basically no difference unless there are no regulations covering their business.
Okay, thank you very much, Luigi. Maybe this is for Manulife or Sun Life. Like, do you think you will take advantage of this insurtech sandbox framework, Or are you looking to offer mga ganyang products siguro? Purely digital. So just a background. So I have a current product before, and then when I applied for another product, I had to sign again a new form stating the same sets of questions. So I think if we digitize everything, if I get a second product, hopefully I don't have to answer this set of questions again. So maybe Manulife, Sun Life, what are your thoughts on InsurTech?
Hello. Yeah, definitely. Like I said earlier, digitization is the way to go. So that's why we had a study on how to proceed with InsurTech, whether what to do with insurance advisors, because our business is currently very heavy in insurance advisors. So I think just to answer your question very briefly, yes, we will. We are doing the digitization route. And I expect all the major insurers will be going that same route. But I'm not particularly sure at this moment on how or to what extent we'll be taking advantage of the sandbox that has been discussed by the regulator.
Okay, thank you. Okay, now let me move on to the customized insurance products. I think this is something that I'm also passionate about, because if you know the client, then you can price the insurance products hopefully more cheaper. So one of the recommendations of the study is to gear towards customized insurance products. And I think this is for Marlo. And this is already happening outside the country. So what are the challenges and opportunities that you are seeing in this space? And how is Sun Life moving towards these innovative technologies like data analytics, blockchain, etc.?
Yeah, thank you for that, Rod. No? Again, another very interesting question. No? So I think we've touched on digitization, InsurTech earlier, right? But really the advent of digitization is really a game changer, since it allows us to expand our horizons in terms of the experience we can provide our clients towards insurance products. No? So pre-pandemic, it was a sense that at least in the Philippines, maybe face-to-face, then you pay premiums, and then over time, you claim, right? So, but I think the industry during that period has really focused on improving the experience in terms of those two aspects, and really just trying to expand their client base and trying to reach out the uninsured. But come pandemic, and we really had to think of our approach. So most of our processes are manual. Touch points are mostly face-to-face. Even the payment scheme, we have to do via branch. And those are really the big challenges that we had to overcome when during the pandemic, when really nobody can go out, nobody can go out to sell, right? So we can't really rely on the old ways during the pandemic. And then that's when the focus of digitization really took off. No? After recovering from that initial pang of the pandemic, what we found out from our studies is that it's really not about customizing the insurance product itself per se. There are also challenges with that one, but it's really more about leveraging this digitization in delivering outstanding client experiences that is well suited towards the lifestyle of the client, right? So the base product will right now, I guess, will stay the same because of it's I think in theory it really works, but it's the base product will stay the same right now, really because of, I guess, the regulations that are put in place, or just the reality we are working with. But it's really the digital touch points where we can improve, and where our clients can derive the most value from insurance products. So data analytics will help in the sense that it helps us understand the needs of the client, not only for right now, but as the client grows and establishes a relationship with that company. So what sa amin nga, we think of insurance not as a product but as a relationship with our clients because of the long-term nature of it. And really what you want in a relationship is a tailor-fit experience to how you want a very good experience towards various life stages. No? So Sun Life focuses heavily towards improving those digital touch points. And we are leveraging heavily, really heavily on analytics to give the best client experience, not only in terms of client discovery, trying to reach out clients that normally advisors wouldn't be able to reach out, right? So we're using analytics to discover more and more clients that really needs insurance, but those are not usually in the crosshairs of our, but those usually that we don't normally see, right? And in terms of current clients, we use analytics to determine uh, what level of experience they would want to have with us. Some clients really want frequent face-to-face, frequent touch points, right? Not only just face-to-face, but also digitally. And some clients really just want the plain vanilla experiences of just paying. And then when the time of claiming comes, they would easily have that transaction with the company. So we are leveraging analytics, data analytics, in order to deliver the best client outcomes across all life stages.
Thank you very much, Marlo, for that one. I don't know if you heard of Apple offering Apple Pay Later. So they are slowly turning into a bank na from mere sellers of cell phones. And I'm looking ahead, right? So 10 years, 20 years from now, is if Apple knows what you are doing on a day-to-day basis, are you going to the gym or are you buying this kinds of stuff, healthy food, then maybe they would know more about the client and they could price more, hopefully cheaper insurance products down the line. But I'm just looking at 10 years, 20 years from now. But I'm sure we are still so far from that one. Yes, Jody, you have something to say?
Yeah, just wanted to add that point exactly. So I've seen sample of customized insurance, if this is what you're talking about, and it takes a lot of data. So from the samples that I saw, that you have to know the customer's habits, you have to know their purchases, if they purchase, how frequent, for example, they purchase alcohol or cigarettes, and then their lifestyle. So just adding to what Marlo said earlier, this is not about the product, but once you have that big of a data, what are you going to do with it in order to improve the customer experience, so that insurance is not a painful, usually it's painful. You have to go underwriting, then you answer all these questions that sometimes are crossing the line in terms of your health and your lifestyle. So it's using those data. So that's, at least for me, that's how I see how customized insurance will work here.
Yeah, so very excited at this during on that part of the business. Now let me move on to let's zoom out a bit, and I think this question is for Miss Arlene. How can we create synergies among the three CIS, like industries, mutual funds, UITF, and VUL? I was able to watch your this kind of panel for the past two, so I'm curious on what you can recommend for our industry like VUL.
Yes, thank you, Rod, for the question. Actually, that's very interesting because if you're ETFs, mutual funds, and VUL insurance sector, they have a lot of common features. It just varies in terms of the complexity, the regulatory bodies, and other specific characteristics of this CIS. For me, in terms of how are we going to synergize this, maybe actually the next phase for me for this particular study, since I really look into the retail investors, is to really examine their behavior, because we want the synergy to become more market driven in terms of how are we going to strategize further for this common investment scheme. Maybe we can start from there, and then by really examining how Filipinos behave, or the investment behavior of the Filipino investors, maybe we can look back again, and then maybe strategize on how are we going to synergize these pooled investment funds.
Okay, thank you very much, Miss Arlene. Related to that one, so we have a CIS law still pending in the Congress. And unfortunately, we don't have Vince Dafon here, but maybe this is for the IC. The CIS law has some pushbacks from the VL side, with insurance companies saying that VL products are not really investments. Instead, it's more of an insurance. So for you, how do you define VL products, and what's our view on this and how can we reconcile these opposing views? I think this is for IC. So they want a VUL out of the CIS law. So maybe just an idea lang on how to go about this.
Hello. Good afternoon. I'm not really sure. Because we have a separate team that is involved in this issue. No?
Okay.
So, we are not updated regarding the IC's position, no, regarding the inclusion of VUL in the CIS. So I don't think I can give a definite answer to that. No.
Okay, no problem, no problem. So for our audience, they have still question to ask from our panelists if there are none. So thank you very much, everyone. Thank you for all our panelists for attending. And I really learned a lot in this session. So let me turn over the mic back to Miss Richelle.
Wow, that's a fruitful discussion. Thank you, everyone. Thank you to our moderator, Rod. Thank you to our panelists. Thank you, Arlene, for joining the panel as well. We are now opening the floor for the questions coming from the audience. If there's still more, kung meron pa ba, if you still have more questions, you can still chat. But if there's none, then that concludes our webinar for today. To our participants, we have just one request. Please turn your attention to the screen for the QR code of our online evaluation form. This will only take you 1 to 2 minutes to complete. In fact, only a minute would do to complete the survey. Please allow us to know your feedback so we know how to improve our future offerings. All right, we'll give you some more, few more seconds to be able to scan that QR code so that you can take time to answer our very short evaluation form, because we want to learn from you how we will be able to improve our future webinars. All right. At this point, we'd like to call on the President and Chairman of CFA Society Philippines to give the closing remarks. Dr. Robert Ramos, CFA Kaya CIPM.
Thank you, Rochelle. The first part of this study began more than 3 years ago. It coincided with the start of my term as the President of the CFA. As this year marks the end of my current term, I'm very happy to see all the stages planned. This study is the first of its kind in the Philippine market. I hope that this will not be the last. The data that we generated from these studies will form part of the base of information that we will use to determine how the Filipino thinks, how the Filipino invests. This was not an easy undertaking to begin with. Well, of course, the pandemic made things, I would say, more interesting. Even with all these challenges, the study is now completed. I would like to thank our study co-proponents, the CFA Institute and the Fund Managers Association of the Philippines. Without you, we would never have been able to push forward. To our partners, Dr. Calderon, Arlene, and the Asian Institute of Management, our Secretariat, our trustees and volunteers of the CFA Society of the Philippines, our distinguished panel guests, thank you for your time, effort, and support. Thank you to all our attendees. We appreciate the time you have put aside to join us. Have a good afternoon. Thank you, Rochelle.
Thank you, Dr. Robert Ramos, President and Chairman of CFA Society Philippines. Again, we'd like to thank you, and please do accept our sincerest appreciation for your time and effort in participating in today's webinar. CFA Society Philippines will make the completed research study, actually the 3 studies, we'll make those available on our website. So for those who attended today's webinar, the link to the URL where you will be able to download the studies will be provided to you. So keep safe, everyone. Again, thank you very much for joining today's webinar.